Good morning. It's Steve O'Hare. It's Monday and it's a really messy Monday. Everything going wrong with the IT at the moment. I'm on my own. Joe and Taff are away, enjoying themselves. It's the 31st of October and it's the end of the month. We've got some headlines coming up. I'm going to go through the headlines first and then dive into the technicals and the charts. So let's crack on with this. So US PCE prices index increased 0.3% for September, with the annual rate unchanged at 6.2. Eurozone industrial sentiment retreated to negative 1.2 for October from negative 0.3 previously, but slightly above consensus forecasts, with services sector confidence also declining on the month. The overall business and consumer confidence index retreated to 92.5 for the month from 93.6. The previous month, and that was in line with expectations. CFTC data recorded a further increase in long speculative euro positions to near 75,000 contracts in the latest week, from below 48,000 previously, and the largest long position since July 21. The positioning will leave the euro vulnerable to fresh selling if it's unable to make headway in the near term. US Treasuries drifted lower on Friday, with a 10-year yield edging above the 4% level. Wall Street equities, however, posted strong gains, with a 2.9% advance in the Nasdaq index, which provided protection for overall risk appetite. China's manufacturing PMI index retreated to 49.2 from October from 50.1 previously, and below consensus of 49.9, while the non-manufacturing index dipped to 48.7 from 50.6, and also below expectations. Data remained concerned over the Chinese outlook, which dampened risk appetite to some extent. And in the early hours of Tuesday morning, the Reserve Bank of Australia will announce its latest policy decision on with consensus forecasts for a further rate hike of 25 basis points, looking to head to 2.85%. The decision and forward guidance from the bank will be crucial for the Australian dollar. So let's dive into some charts. I'm going to start off with Bitcoin. Let's take a look at that. Right, so from a weekly basis, let's get these charts all sorted. We have reacted a little bit higher from support. Over last week, we saw prices take out levels that we haven't seen in about 6 weeks, got up to and closed on the week, that's Sunday night's close, at 20,628, slightly above the previous resistance level of 20,550. So a little bit of a positive week for Bitcoin. Let's take a look at the daily chart to see if there's any real levels being highlighted here. Let's get rid of this head and shoulders formation. So previous resistance levels that we saw early September and in October have been taken out, we can see here, but they've stalled quite only just above here. The high that we got on this chart was just above 21,000. So potential for a double top formation if we can manage to get below the neckline of 20,000. So that's not a bad area of support to look out for. Looking at slightly more shorter term, this is sort of a little bit more of a shorter term picture. We can see the support here and levels spiking down here and finding buyers, and now resistance up here. Next level of resistance is around about the 22,800 level. So definitely watch out for that. Let me just move that up. Hi, Rariel Lizard. Yes, morning. We'll look at cable in a second. Looking at the commodities first, jump into the commodities and taking a look at gold. Now, on the week, gold's still under pressure. It's below the support line that we've drawn here. 1670 is really the resistance now. That was the bottom of the previous support area or range, and we don't seem to be able to break back above it. We've spent 2 weeks below it after a close the third week, 3 weeks ago. So still looking negative. Really has to recapture ground above the 1670 level to stave off this negative potential. We've got a double top formation on the weekly chart, so long-term chart. That tells us we're heading towards the 1300 level as a measured move. So that's a long way off. Don't worry about that too much yet. But we are in a bearish channel on the daily chart. And we can see that price action has attempted more recently at the start of October to really push back above that resistance level or the channel top, and failed to do so, stalled around about the 1735 area. That's the real major resistance we've got to watch for. And we've got a double bottom formation here. We've got the low down at 1615. We made a new low at 1617. That allows us to think that there is some light at the end of the tunnel, but we would require a break above that 1735 in gold. Currently, we're seeing the last 3 days of price action has left us with an evening doji star formation. It's nice to see that at the top of the trend. It's only a really short-term trend, so that gives us a little bit of a, even on a shorter-term chart, maybe a head and shoulders looking formation, and we can see it from the hourly chart. Up here, left shoulder, neckline, right shoulder, and neckline here, and sorry, right shoulder there. So, but overall, these are the levels to watch. 1675, the top here, and really looking for a break below the 1638 level to open up the downside on gold. On crude oil, we've seemed to have stalled after quite a positive few days. We saw price action breaking from this sideways congestion area all the way up until the 25th of October. Saw a really strong break higher, but again, price action has stalled on Thursday and has reversed Friday and Monday, and further downside looks like there's potential for that. We'll have this trend line support coming in. That comes in around about the 84.35 level on WTI crude oil, with resistance sitting at 89.30. So yeah, definitely looking slightly bearish at the moment, but needs to break below that support level to stave off that negativity. On natural gas, again, similar sort of price action. We saw a nice little pickup, the lows around about the 530 level, and we stalled at 625, and a nice reversal from there. But we've off to a sort of fine start this morning. Friday's price action posted a bullish hammer. We've seen some nice projection higher this morning, trading at 615. Resistance level, as I say, coming in at 625, support of 557 in natural gas. Let's move on to the commodity markets. Oh, sorry, the FX markets. Take a look at dollar index to start with, and we can see this turnaround that we saw, this bullish candle from Thursday's price action followed through on Friday, and today we're taking out the high from last Wednesday. That's at 111.13.5, and further upside opening up really on that DAX. That'll put pressure on those commodities there, the gold and the oil, and we should see some sort of fireworks if we can manage to get, or the dollar index can get above this 111.13 with some significance this morning. So very positive on the dollar. How does that affect the euro dollar? Euro dollar under pressure. There's this bearish channel that we managed to break above last Wednesday, however, reversed with a bearish engulfing on the Thursday, and real indecision on Friday. No one really sort of like willing to take that move ahead of the weekend. However, this from Sunday night, we've seen an aggressive sell-off and created a new low, the lowest level in 3 days. Still have a little bit of support coming in with this reverse trend line from the channel, but that won't give us too much issue if bears really start to get hold of this. Looking at cable now. Saw a great week for cable last week. We saw prices getting up to levels we hadn't seen in 6 weeks, and really trying hard. Seen euro dollar crossing below 99.20 just as we speak. I think on the intraday basis we're looking to sell a break there. So there's obviously that negative momentum building up. 117.60 is the resistance level between 117.40 117.60 in cable. That's definitely underperformed on the dollar pairs over the last few months, but a great show on Friday. On the last week overall. Off to a negative start this morning. Has tried to sort of like break back above last week's highs, 116.45, but failing to do so at the moment, and support coming in around about the 115.09 level at the moment. So that'll be the levels to watch, and a break down here if this dollar index continues to strengthen. Looking at shorter term levels on cable, really looking at this 115 level, 149, 114.97.5. For me, it's key for cable to hold on cable to this sort of level, which comes in at 114.10. That was the swing low back in March 2020. We're above it at the moment. Really should find some support down there, and this could be a nice little bottom formation. Again, still a long way to go, but the pressure is on this morning with this dollar strength, and that has helped out the dollar yen. We saw a nice morning doji star formation. That's a bottom formation. It got down to around about the 145 level, which was a previous resistance turned into support, stalled there and projected higher, and looks like it could go again. 148.42 is resistance level, a break above there, and it's back on track. So that's what we can see this morning. Let's take a look at our gun to head trade idea. So we did some gun to head trade ideas on also gold breaking down as we speak. So watch out for that 1638 breaking down in gold, and that move looking like the dollar is looking to strengthen even more aggressively. So let's take a look at where we got to on Friday. Take a look at our profile. If you go to signal _ center profile, you can see our ideas from Friday, and this was the Germany 40 trade idea. Obviously we saw a nice turnaround in the indices, and that was stopped out on the how did TAF get on? Let's take a look at how TAF got on. TAF's gun to head was a short in the Dow Jones, and again that didn't fare too well. So getting short on the indices didn't work out well for us on Friday. So let's take a look at where we're going to look at today. Gun to head trade idea, for anyone who doesn't know, we pick a trade live on air. Each trade has a entry level and target and stop of at least 2-to-1 risk reward. So that's what we're looking for. At the if it hits the target or the stop, at the end of the day, we mark the profit or loss. Either we lose 1% or make over 2%, and we're really sort of looking to see how that sort of like plays out over the day. If we don't actually hit the target or stop, then we mark where it is at 9 p.m. UK time. So everything really telling me to really take a look at the dollar this morning, and maybe even maybe even I'll go for euro dollar this morning. Just seen a break, looking at the hourly chart, just seen a break of the support level. Looks like a bit of a head and shoulders, really. If I Draw it like that. And that sort of move could lead to a measured move of around about, looking for the extension to be equal to the top of the head to the neckline. That comes in at 98.25. So looking to get on that, I'll start with, why not just go with it, looking for that move. I'll try and pull the stop in a little bit just to get the right sort of risk reward. Getting short at 99.17 and stop level. Only a very tight stop, 99.47 stop, and looking for a move to 98.27. That's a 3-to-1 risk reward. So that's what I'm going for. Very, very tight stop. Bear that in mind. So that's my trade idea for the day. What have we got to look forward to later? We've got the Eurozone consumer prices coming in at 10 o'clock. The RBA interest rate decision, as I said, Tuesday morning, early hours of Tuesday morning, 3:30 UK time. And for the rest of the week, we've got US manufacturing index tomorrow. We've got the federal policy decision, Bank of England policy decision, and we've got an NFP Friday coming this week. So plenty of volatility, plenty to get our teeth stuck into later in the week. It's been a very short, sharp show this morning. Hope you've enjoyed it, and hopefully I'll be a bit more organised tomorrow. So until then, look forward to seeing you then. Thanks very much.